Hi, it's Hannah Walker from property.co.nz here today, and I have the pleasure of introducing Bryony from Mortgage Lab. Hi, Bryony.
Hi, Hannah. Great to be here.
Nice to see you as well. Listen, I thought I'd get you along because you are the expert in this, and there's been a lot of chat about the CCCFA that's come around at the moment, and I just wanted to ask you a couple of questions and get your advice so that people sort of know what to expect. And I wonder, I believe that there's an amendment on the CCCFA that's come in recently. What does that mean? Can you explain it to us?
Certainly. So a bit of background information first. CCCFA, for all of you that don't quite understand what that means, Credit Contract Consumer Finance Act, came into effect in December of 2021, and it was to ensure lending is affordable and sustainable. And while the intent was to protect vulnerable consumers from predatory, irresponsible lenders, there were unintended consequences. So effective on the 7th of July, those amendments are kicking in, curbing any of those unintended consequences based on feedback from lenders, banks, consumers. That's what that is all about. Okay, right. Hopefully that was nice layman terms for everyone.
Perfect. So, you know, with this, I think there's been some changes coming up with CCCFA, sorry. And what impact do you think that we can expect to see in the market for the housing market?
Well, first of all, I think it's really important to touch on the main concepts of those changes.
Yes.
And how they will affect the market. So one of the first ones that I think is really important is currently information is collected from, for example, a client applies, we get 3 months worth of bank statements, and every month there's $500 of takeout expenses. So currently those takeout expenses of $500 a month are included in the application, and the client gets a decline. And that's it, they go away and think, oh my goodness, that's too hard basket, I'm out of the market.
Yeah.
So what happens now is with this new amendment that's come into place is information collected from the client directly will be sufficient rather than relating information from bank transaction records to determine future expenditure. Okay, we still explain to lenders that client A has a $500 extra a month in takeouts. However, we have confirmed with them that that will no longer occur in order for them to get an approved lending application and move forward with owning a home. So that's really important, and that's a good step in that amendment. And the second one was the removal of savings and investments. So currently those are included in future expenditure. And of course, savings and investments are something the client can control, so they can stop those savings and investments in order to afford a home. So that will be part of the new amendment as well. The exception is KiwiSaver. They will not remove that from your expenditure unless you get advice from a financial advice investment specialist, where you may be able to opt out based on their analysis in terms of how it may benefit you to achieve your lending criteria, and possibly offset stopping contributing to KiwiSaver for a short term in lieu of future capital gains. So that's something you can seek as well in terms of getting that application across the line. So I think there's some really good improvements there, and the effect is going to be increased approvals, and it will affect the market, which I think is your next question.
Yeah, which is great. So do you think it's going to be easier for those first home buyers in the market to get approved for lending?
Well, you know, it's never easy. It's always
it's never easy, is it?
Yeah. Yeah. But, you know, our job is to make sure that we understand the lending policy and match the clients up with the right lender for them, and then start that process. But we are going to see people who deserve to get a mortgage back in the marketplace. Okay. People that got declined before. Exactly. So it's going to equate to increased buyers and increased competition in the market, because the more buyers, the more the competition is. And it's really important to note, though, that banks may be managing their lending conservatively. And this is likely due to, you know, you've still got your global economic conditions, your OCR situation, your LVRs, and changing in house prices. Mm-hmm. So while we may not see banks go back to where they were due to other regulations, this amendment does look promising compared to the recent negativity that we're seeing in the media speculation.
Yeah. So what about people who already own their own property and they're thinking of selling? What does this change mean for them?
Well, I think that's a really good question, Hannah. So first of all, this means the buyer market pool will increase. And if you are a pre-approved buyer, you should probably act now before you see this expected momentum as a result of this CCCFA amendment changes, because the buyer pool will increase. This would also apply to the sellers that you're asking about too. We're not going to see a 0 to 60 in one day, in my opinion, but we will see increased buyer activity. So get your home on the market and take advantage of those buyers. That's my advice. I'll always say, you know, you're the captain of your own ship. And at the end of the day, if you decide your sell price, that's your prerogative, and your agent will come in and assess to tell you whether that's achievable. So you really don't hesitate in getting that property in the market.
Fantastic. That's really good advice. It's interesting. So you sort of almost covered that, but it says, I just want to say, so what's your opinion of how this sort of change will affect the market in the short to the medium term? So you're thinking that there'll be buyers are more likely to get, when these CCCFA changes come out, there'll be more buyers in the market. So if you're looking to buy a property now, you should jump in and just buy it and beat the competition.
Well, you obviously want to do due diligence, but you know, to avoid that competition, which is what was happening when the market was really heated up, you had a lot of competition with the buyers. And my own experiences as a financial advisor was, you know, I had clients that were pre-approved, they go and put an offer in, and next thing you know, they're competing with multiple buyers. So if you have a pre-approval, like I said, that's really important to get in there now and act now. Otherwise, you're going to probably find yourself back in that competitive situation again.
Yeah.
As a financial advisor, we are in the process of reconnecting with previous clients if they haven't reached out to us already. Some of them are a little bit intimidated because of what happened during the CCCFA consequences. So the ones that were declined, we're reconnecting with them based on the CCCFA guidelines and seeing if they can now qualify. So this, combined with the first home loan caps that recently came into place as well, will make a really positive difference in the short to medium term in terms of market activity. To place this into perspective, November and December of last year, we experienced a 70% application decline for clients.
Wow, that's huge.
Yeah, it is. So with these new changes, we're now expecting to be back within our approximate normal range of 10 to 20% decline. So you're definitely going to see that increase in the market. So my message is, thinking of buying and have that pre-approval in hand, contact your property agent, get that deal happening. And if you're thinking of selling, contact your property agent again and get it sold. The buyer momentum will be back. And for those that are really shy to apply, you know, contact me, contact your local Mortgage Lab financial advisor. We're 100% online. We have a team working NZ-wide, just like property.
Fantastic. It's great when online businesses come together and they can make deals happen, and it's fantastic that we get to work with you guys and get your advice. So thank you so much for coming along today and chatting to us. I'm sure that lots of people will learn lots, and they'll be excited to take the next step in the property ladder and get a mortgage.
Exciting times.
Okay, bye.